So on May 27th, we had no change in the OCR. It's still at 2.25%. The Reserve Bank forecast increasing OCR later this year. Most banks, and including the markets, are predicting that that will occur at their next OCR change in July. If not that one, then September. We are going to see some increases in the OCR because we're below neutral. A neutral rate is deemed to be closer to 3% at the moment. So we are expecting to see a few increases, but not more than that. And I think the markets had overcooked it a bit. So mortgage rates are hovering in the high fours, and I think they'll largely stay there based on current forecasts and not move up too quickly. What would change that is if the RBNZ tightens its forecast further and sees more increases in the OCR sooner. Now, what would drive that would be inflation getting a little bit more out of control. I don't see that happening. The economy, from my perspective, is still reasonably weak. We've got a strong agricultural sector that is starting to flow through to the major metro locations. Farmers have been paying off debt. They are starting to invest. I think that will become more evident in some of the business numbers that we see coming through over the next 2 or 3 months. But you know, we're in an election year. Things are going to be uncertain in the second half of the year. We're still fumbling our way through the oil crisis in the Middle East. All of that, for me, spells a year of uncertainty and not really seeing the beginnings of a recovery starting until we get back from Christmas holidays, so early 2027. What that means for the housing market, it's absolutely a buyer's market out there at the moment. We've got the highest stock levels we've seen in a decade. We've still got relatively low interest rates and very competitively priced houses. So for first home buyers, I don't think affordabilities look this good. It's not going to last forever. Once we start to get into a recovery, you'll get employment growth, you'll start to get a bit more positive immigration, and I think any excess housing stock will gradually start to disappear next year. You're not going to see house prices take off anytime soon, but you should start to see a gradual recovery in house prices from the lows that they reached in Auckland and Wellington. And to put that in perspective, you know, Wellington in absolute terms is down about 25%. Auckland is down around 20%. If you add inflation over the last 4 or 5 years, you know, you're talking real reductions of 30 to 35%. That's a massive reduction in house prices, and I guess that's a reflection of the affordability that we see out there at the moment.